Welcome to TNR Plus series, where I collaborate with special guests and often industry experts. I'm Tharmila Rajasingam, licensed realtor with eXp Realty Brokerage here in Toronto. Our channel is all about Toronto real estate investing, wealth mindset, marketing, and personal branding. Subscribe to our channel, hit the like button, and hit the notification bell so you can get updates on our new content. This video is super special because it's my first video of this series, and I had the honor of sitting down with Richard Tartaglia, mortgage agent with Fine Group. With over 8 years of banking and brokering experience, Richard brings an extensive financing knowledge to the table. My husband and I had an opportunity to work with Richard when purchasing our investment properties, and we were so lucky to work with him. He has been frequently recognized as a top performer, winning Scotiabank's Best of the Best in 3 separate occasions. Richard was awarded Mortgage Alliance Masters Club Award in 2017, Elite Club Award in 2018, and President Club Award in 2019 for attaining top 5% in production out of all Mortgage Alliance agents across Canada. And Richard financially prepared my husband and I to purchase 2 investment properties within 3 months of each other. Now let's go check out my conversation with Richard regarding mortgage financing in the current environment due to COVID. Hi, Richard. Thank you so much for joining me in this conversation. And I'm looking forward to talking about a couple of things, especially about today's market and how, especially what's happening in today's environment with COVID-19 and how financing is affected. And I'm super happy to have you on the call. And it'll be great if you can answer some questions and have a conversation about this.
Yeah, sure. There's a lot to talk about in the financing world, especially with regards to COVID and, the market's crazy and rates are at all-time low. Like, what does it mean? Where did it come from? How did we get to this point? And where are we headed? I think you're definitely able to shed some light on that.
Great, absolutely. So to start off, how are the lenders responding to the mortgage deferral since the first wave of COVID-19?
So in March, we sort of had the wave, end of February, I guess, early March kind of was hitting, and how lenders responded to like the deferrals, or what in specifically, like what would you say, what would you want to review there?
Yeah, so in terms of the mortgage deferrals coming into effect, how is this affecting, let's say, people that are looking into getting financing, and how are the big 6, I guess, the lenders, the big 6 banks responding to it? Are people taking on these deferrals? Do they want them to take them? And then we'll talk about some of the restriction. I know you and I had a personal conversation about how that could affect your future financing and what that looks like.
Yeah, so it was in March, it was announced that the big banks were offering deferrals, and any of the big lenders were really offering deferrals. And there was a total unknown variable that this was advertised, and this is really frustrating on our end as mortgage brokers and for borrowers as well. It was really frustrating in the sense that we were not given a clear path about what would happen if you did take a deferral. So essentially, like it was communicated that, take a deferral, that, kind of free lunch, you may have to add the interest to your principal and your mortgage, and you'll pay interest on interest. That was made aware to us. But the lenders themselves didn't even know that they were actually going to be reporting deferrals on credit bureaus at the time when it was announced. And because they're being recorded on credit bureaus, the department that is involved with making the decision that they're offering these deferrals is kind of not in line with the department that is approving mortgages. So what we saw in the later fallout of the deferrals was that people were getting declined for taking deferrals. So that was a big piece between like April, May, even June. And now we're seeing the underwriting department being a little more lenient towards deferral. So if you had a deferral, we could, with a strong business case, we can get around that to get you an approval if it makes sense, as opposed to like back in May, it would have been a straight decline.
That's interesting. So when did this change? More recently?
Yeah, more recently, like June, July. It's not really that it's changed. It's just that they're considering it in a common sense approach now, which makes sense. So if we've received approvals for people who have had deferrals, you want to be out of a deferral if you've taken one. So turn, the tap back on. I'd rather see at this, even for anybody, I'd rather see somebody, if they're considering taking a mortgage deferral, I'd actually rather see you take it from a line of credit and pay for the mortgage rather than actually do the deferral, because it shows up on the credit bureau and you never know when you're going to need credit. Usually people need credit when things are tougher, rather than needing credit when things are good, right? Because why would you need credit? Absolutely.
No, that's a good strategy. And and has the process changed in terms of mortgage qualifying, if especially in today's market, I guess the current environment?
Yeah. So the market, the qualifying, lenders are looking for more recent income documentation. They want to know that you haven't been let go. If you're self-employed, they're going to want to see the last 3 months bank account statements showing your most recent business revenue going into the account, like something recent. So they're being very hands-on with we want recent documentation, something within 14 days of the approval, rather than in the past we were able to swing documents that were like 30 days old or 45 days old. So now they're just being more particular about that. And alternative lenders like B lenders, they've actually scaled back their loan to values. So where you might have been able to buy a purchase a rental property for 20% down, maybe now you're requiring the 25% down. So there's small things like that, but overall, there's no credit crisis.
Got it. Okay, no, that's good. And what is your take on current variable rates and fixed rates given the current conditions?
Yeah, so a lot can be packed into that answer. Bank of Canada affects variable rates. The Government of Canada affects fixed rates by purchasing bonds. If we follow the bond yield, we see where fixed rates are headed. So what we saw during March was kind of a peak because lenders were looking for liquidity. Coming into later in the year, rates were down and they are low, like fixed rates are very low. So you can actually predict that to a certain degree with looking at the bond yields. So that's what's going on with fixed rates. And there's actually Canada mortgage bonds there's this program the government has instated that's being seized this month, which could mean that fixed rates are coming up in the short term, which would, if you're thinking of going fixed, do it sooner rather than later. But if you're going variable, we've got runway with that. So we've got 2 to 3 years where rates are going to be low because the Bank of Canada has said, Tiff McEnany is the new governor of the Bank of Canada, and he's been unusually clear about the direction of rates. So due to the pandemic, we want to keep the low rates. Variable rates will be low for the next 2 to 3 years. So generally what we're recommending is take a variable now, lock it in about 2 years. So you have 7 years of low rates. That's been a really good strategy because the market likes fixed rates at around 3% rather than they're like 1.8% right now.
And has the process, and what can we expect in terms of mortgage rates for refinancing? Again, you have to think about is there a big difference between if you're a first-time home buyer versus if you're an investor, for example, and have rental properties?
Yeah, those are different types of mortgages. Every case is unique. We have different buckets where we put mortgages in. We have your conventional mortgages. Conventional is typically considered, the definition of a conventional mortgage is that it's not government backed. So there's usually 20% down, 30-year amortization. That type of a mortgage would be conventional. First-time home buyers, if you're less than 20% down payment, that's a high ratio mortgage. Those are better rates, despite what you would think, less down payment means better rates. I get that question a lot, but it's true. With a high ratio mortgage, the mortgage is insured, so the lender's risk is reduced, so they can offer a better return on their investment, and means it's a better rate for the borrower. But you've got your high ratio mortgages or better rates. Rental properties tend to have a bit of a premium on them. And then your conventional mortgages are kind of in the middle of the two. But generally right now it's between like 1.5% to like 2.5% for those three types of mortgages, depending on if, you have great credit, or maybe you're taking a 25-year versus a 30-year, different variables between there. But historically low rates, it's a great time to owe money. It's great. But obviously we want to work on paying it down, strategies on doing that, but yeah, it's generally what we do.
And what recommendations do you have in terms of someone trying to obtain financing in today's market? And also kind of like, how would you prepare them to?
So I would just say, be ahead of the gun, be prepared. Always have an annual mortgage review to just review where things are. Like, what can I access? What do I have available to me? Do we maybe clean things up if you need to have debt cleaned up, or sort of optimize so that in the future you can borrow more if you need to borrow more? If you're an investor, you definitely want to have annual reviews, because there's a lot that can be done to put you in a better position to qualify. And so I guess my general sense would be proactive about things and be organized. So create a Google Drive or some place where you can store everything, have it labeled, legible, complete, solid documentation, so that if you ever need to purchase or refinance, or even do your taxes, you have this nice kind of central location to pull documentation. Like, do you want to have like property taxes, your IDs? You want to have a net worth sort of calculation done, annual mortgage statements you want to save, that type of stuff. Just have it and be proactive about being organized.
Yeah, absolutely. And with the current market, and especially in Toronto, it's constantly changing. And especially from the real estate perspective, going from sellers to buyers market so instantly. I really like that strategy, and keeping kind of being prepared in a way that, the first questions I ask all my buyer clients is that, what can you afford, right? Do you have mortgage approval? Have you spoken to a mortgage agent? And also, I know you talked about having a mortgage, having to look at your mortgage on an annual basis. Is that something that you help them with?
Yeah, definitely. Yeah. So we just look at things, and maybe you've accumulated some line of credit debt, or maybe you've taken on a car loan that you can maybe clean up, or credit card debt, and or maybe you have a shortened amortization. We can do a lot of creative financing to clean things up to help you qualify for more. Or maybe it's your mortgage is coming up for maturity. Like there's a lot of people say, I want to quit my job and start investing in real estate full time, but it's like, well, don't do that yet. Let's put a break on that. Don't quit your day job, because you need that to get financing, rather than just sort of touching base with. It doesn't have to be an application, just a sort of general conversation about where you're at in that moment and where you have to be, because as we all know, if we don't have a direction to go to, we don't get there.
Yeah, absolutely. And it's so funny when you're thinking about buying a property, you think that, the only thing that matters is my full-time job. And I remember when we were sitting with you, and Josh and my husband and I, we both have tons of different jobs, and we have a car lease, and, all these other payments that you don't really think about when you're looking into buying a property, that you think that, they're just going to look at what I own right now, and if I own any other properties. So
yeah, there's a lot. There's definitely a whole conversation around it. it's just a matter of being proactive about things. And I got a lot of people that, they contact me. They want to, they want to grow their, let's say, for instance, somebody wants to grow their real estate portfolio. They want to acquire another rental property, but they haven't been proactive about their documentation. And then I tell them, we're going to need this, and this. And then that's just so discouraging sometimes for people, because it's such an upward battle. But if you already have it sort of done previously, prior to the conversation, then you're in a much better position to have a very concrete, reliable conversation with whoever it is that's doing your mortgage, as well as we can just give you much better advice. And then when you're ready to pull the plug, it's not this sort of really burdensome request of documentation, because there's a lot that we request now. Regulatory bodies really give lenders a lot of hard time on audits. So the documentation, again, it's a real sort of focus in this industry, to just make sure it's all complete.
Yeah, absolutely. And I think that being prepared is, it's interesting when we're having that conversation about collecting the right type of documentations. People think that it's, the mortgage agent will just know the type of things, how my financial health is. But it really is a two-way conversation and kind of working together as a team, right? So because the more information you're able to provide your mortgage specialists, the more information they're helping you kind of streamline and helping you achieve your whatever goals that you have in mind, right?
Yeah. Or I get somebody who's like, well, I didn't need to get that documentation the last time I did a mortgage. And it's like, well, things have changed. And maybe the person you were dealing with in the past didn't consider these extra items that we're trying to look at. It's changed. And like, I would say to anybody who's looking for a mortgage, hit the reset button. Because just really hit a reset button, because the conversation that you'll have will be much more document oriented. But obviously, there's strategy too, and we have to be very cognizant of that as well, without losing focus. It's an involved process. So be prepared would be my 2 cents. That's awesome advice. And thank you so much for having this conversation. I know at a high level, and we talked about various little things, and there's tons of things that come around, rates and the length of your financial, if whatever loan that you're looking to get. And whatever your goal is, right? Whether you're buying for the first time or if you want to set yourself up to be an investor. So how can people reach out to you, Richard? I know that we've had some really awesome conversation in the past, and you've helped us really understand what it's like to own properties and to manage your finances. So I would love to continue having more conversations with you like this, so that we're talking about different exciting topics that other people are interested in. But in the meantime, if someone wants to get in touch with you, if you can give us a little bit of info on that. Yeah, so I'm. This is my card. If you recognize Vine Group, we're great brokers, number one team within Mortgage Alliance. We're very specialized, all kind of ex-bankers, 9 years of doing mortgages. 6 of those years was with the big banks on Bay Street. And essentially, email me, call me, 416-629-8896, or my email, richard at vinegroup.ca. You just Google Vine Group, it will be the first hit, I think, or my name, Richard Tartaglia. You should be able to find me. It doesn't have to be what do I qualify for? It could be, how do we get you to the point where you qualify for something? And it's just a matter of having the conversation, the chat. So happy to have a conversation with anyone on in the YouTube world, which is a great place to be. But Tharmila, you were so kind to have me on. Thanks for hosting. Wanted to ask you a couple of things, because you're obviously killing it with what you're doing, and we're super excited to see what 2021 has in stock. And I wanted to ask you a couple of things about where you're headed. And I know you're in Toronto, but where are you thinking you might be specializing in? Because there's a lot of realtors that like to focus on like one area, but there's a lot of them that do sort of everywhere. But what's your take on that, and where would you like to see yourself operating in areas.
Absolutely. No, that's a great question. And you know what, Richard, every time people ask me, hey, can you buy me somewhere in Newmarket? And of course, right, you can help. I'm looking to help anyone who needs, help purchasing a property in anywhere in the GTA or even a little bit further. As you know, Josh and I own properties in St. Catharines. However, as a marketing person, I like to always do some research in areas that I want to specialize in, really get to know. And more certainly, and more currently, and looking at some of the TREB information, I got interested in more of the Toronto Central and Toronto East area, not only because I live closer to it. I wanted to kind of find there's tons of information about understanding what a neighborhood is and all the information that comes with it. So right now I'm doing some research, and I think you might have seen some of my videos that I'm putting out about the Toronto beaches. And I have a couple of videos that are coming out that I'm learning about the cost of living in the beaches. And it's interesting when people thinking about a neighborhood, they think that, if it's closer to Toronto or in the in the areas of where other parts of Toronto is, they think that, oh, they're all the same in terms of cost of living. And it's so interesting when I started pulling up numbers now that I have access to them, looking at the rental rates, they're constantly changing. And even if anyone that have access to PadMapper, you can just quickly pull up what the rental rates are in terms of leasing versus what are detached houses in terms of, buying a property or a townhouse or a condo townhouse, and how much that price has changed, let alone in a couple of months, right? So those are kind of information that I'm looking at, and I'm doing some videos in and trying to put out there so that people know exactly what the type of neighborhoods are going to be looking forward to moving into, or even especially with now that a lot of people are moving out of Toronto, right? And moving into smaller suburbs and a little bit further away, and having access to having to work online, it's making it a bit easier for people to wanting to move out a little bit further and be able to afford something that's a little bit more affordable. And we're looking at that in terms of some of our rental properties that we put out in St. Catharines, the amount of calls that we're getting from people that are coming in from the city, which wasn't the case, a couple of months back. So, no, that's a great question. So right now I'm kind of focusing in the Toronto Central, Toronto East area, but again, I'm looking to service all around the GTA and a little bit further as well.
Yeah, that's awesome. And people ask me, they're like, who do you like to work with? And I like working with people that want to work with me.
Absolutely.
You know what I mean? There's no sort of
absolutely
niche, but we do everything, right? And but there is for you, you're in town, you're in Toronto, so it's a great area. I remember when I was living downtown, the cost of living at like Toronto, like front and Spadina, versus like out in Etobicoke, completely different. The access to what amenities you have in grocery stores and whatnot, it's the cost per dollar really does vary within Toronto.
Absolutely. And it's so interesting when you look at an area that you may think that, hey, I want to move there and I want to eventually, live there for 5-10 years and potentially have a family. And at that point in time, you may think that, oh, there's no schools there, but there may be in the plans in the next 2 years. For example, when Josh and I moved down to the City Place neighborhood, we were living in a condo. I would have never thought that, they're going to be opening up a rec center, a Catholic school, a public school, all within this area where there's so many condos, right? So that's something to, I guess, speak to your agent about, right? And find out what are some plans in that neighborhood, and that if you're looking to move there, that you can kind of plan for 2 to 3 years, even longer, right? It doesn't have to be for something that's so immediate and short term, I guess. Yeah. Anyways, cool. Thank you, Richard. I really appreciate it. I wanted to keep this short that we can get some eyes on it on YouTube and have some conversation going. But I really appreciate kind of starting this conversation about mortgage and financing. And I'm happy to have you on the call because I know that you're a super insightful person when it comes to this industry. So if anybody has a question, we'll have them comment below on this channel, and feel free to jump in and answer those questions for us, Richard. And hopefully we can keep this conversation going. I really appreciate you taking time.
Yeah, thanks so much for having me on. Really appreciate it.
Absolutely.
We'll chat soon, I'm sure.
Absolutely. Thank you, Richard. You take care.
Bye. You too.